The dollar is collapsing faster than people think. One of the most famous people on Wall Street just admitted defeat when it comes to Bitcoin. Governments are buying in, and gold and silver, they're flashing a warning sign we've only seen a couple of times in the past 50 years. In this episode of Around the Block, we're breaking down the signals beyond the headlines, the moves that smart money is making, what they might know that most don't, and how this all ties back to Bitcoin. Let's go ahead and say the quiet part out loud. The dollar has lost 10% of its value this year. That's not just some statistic. That's your purchasing power evaporating in real time. Just look at the average price of groceries for a family of four in the US. It's now over $1,000 a month. That's up over 30% since COVID. Inflation is brutal when it comes to the cost of living. However, it's even worse when you look at trying to acquire assets. The difference between the median home price and household income has reached a gap of $343,000. This is the largest gap in history. When people complain that Gen Z is living home with their parents far longer than they did, they were out on their own when they're 18. Well, let's look at the actual data here. The average salary for a Gen Z is just under $40,000 at $39,416. The average living wage is $89,461. You see the challenge here? You need to make double the average salary just to have a living wage now in 2026. The whole promise, the whole point is to accumulate enough purchasing power and wealth so that you can retire one day, right? You can live off the fruits of your labor. You can store your economic energy. But this post does a great job of explaining they are now making people play forever. I love playing the game Monopoly, although every time I play with my friends, giant arguments ensue, but that's the point of the game. And this post does a great job of explaining life as it were a game of Monopoly. Let's just read this word for word because it's worth it. Imagine playing Monopoly, but never buying any asset or investment that generates income. Imagine you just went around collecting $200, giving your money to the rich, and trying to stay out of jail. Sounds ridiculous, but that's how most people live their lives. It's so true. We're far past the point where you can just save your money. Savers are now losers because you're losing value so quickly that unless your income is extravagant, you're never going to keep up with inflation. You're going to basically be treading water the whole time. You must own assets. However, the challenge is the rich have inflated the assets to such an exorbitant level that there is no way that the average person can ever own any real asset. Although the price is down, it feels so good to see the Wall Street elite finally changing their tune on Bitcoin and blockchain technology. Let's listen to Jamie Dimon and what he says.
Blockchain is real. It's been around for quite a while, but now it's becoming more effective, more efficient because people are finding ways to do it faster and cheaper, permissioned or not permissioned. Smart contracts, I think, will probably be real.
Now, if you remember, Jamie Dimon has been one of the most outspoken critics of Bitcoin, calling it rat poison, saying it's going to zero, and now they are adopting it. In fact, the analysts at JP Morgan have Bitcoin targeted for $170,000 per coin this year, with some of the people on the team having it happen within the next few months. Just like Michael Saylor has said, you're always against Bitcoin before you are for it. And they're not the only major financial player to be singing this new tune. We've got Fidelity saying that Bitcoin and crypto are becoming central in their conversations with clients. These high-value clients always get access first, which is why you're seeing these private notices flow around the internet when people have received them who are high net worth individuals, offering them access to these very intricate Bitcoin products. If you would have said this would be reality years ago, people would have laughed in your face. Yet here we are. And they're beginning to put their money where their mouth is. They bought almost 27 million in Bitcoin. Now that is a very small buy for someone of their size, but they're dipping their toe in the water and likely more buys are coming. So if you're enjoying this episode and you want to understand how to take your crypto education to the next level and make next year the year that you master this space, then I invite you to schedule a call with me or my team. We can help you go from a novice to a pro in just 6 weeks. We specifically work with business leaders and accredited investors. We have people in our program who have sold their companies for tens of millions of dollars. If you want to be around a group of elite entrepreneurs who are ready to master the world of crypto, just scroll down to the description of this video and you'll see a link to book a call with me or my team. And now let's get back to the video. Here's a buy that you would have never seen coming. Michael Saylor buying more Bitcoin? No, I'm just kidding. Of course he's going to buy more Bitcoin. This one is obvious, but there's a few more that are big surprises. The first one to call your attention to is the great state of Texas. They have just acquired $10 million in Bitcoin for a strategic reserve. This is a state level Bitcoin strategic reserve. And my home state of New Jersey, jumping on the bandwagon here, they have revealed $16 million buy worth of strategy stock. Now, this is not direct exposure to Bitcoin, but is a proxy that many large institutions are more comfortable with, because the strategy of strategy is essentially to acquire as much Bitcoin as possible and increase the Bitcoin per share. So in theory, if Bitcoin continues to climb at its average annualized rate, investing in strategy will be a great long-term plan. And another big bank, Wells Fargo, has disclosed they have nearly 383 million worth of the Bitcoin ETF. Here's what happens. When smart money moves, they try to move as quietly as possible. Now, they must disclose this, but luckily there is a lag for them, and they are happy for the price to stay as low for as long as it can, because they want to accumulate at low numbers and build a new base of support before the price moves upward. Big money is smart. Retail is the one that has emotion and panics. Now, there's so many charts flying around the internet, it's difficult to know which one's going to play out, but this is an interesting chart that I wanted to call your attention to. It's showing this bullish crossover, and each time this bullish crossover has taken place, the price has rallied significantly. Just look at these green boxes. These are massive legs up when this crossover takes place. It's not instant, but it happens very soon after this bullish crossover. Hopefully, we get the same thing to play out. Now on to the celebration of boomers worldwide. Gold and silver absolutely dominating Bitcoin, crypto, and basically every other asset this year. I thought this was a funny meme, but let's look at what's really happening behind the scenes. Gold and silver rallying historically does not happen in ideal economic conditions. People don't flee to these precious metals or hard assets when they think the economy's in a good spot. This post does a good job of describing what has happened previously. The money is shifting away from stocks and bonds and more towards physical assets, and this pattern has shown up repeatedly throughout history. It goes on to explain this pattern plays out ahead of multiple past recessions. Commodity prices move higher while equities stayed calm. And what he's describing here is not that one asset, such as gold or silver, is moving up, keeping the others in the dust. It's all happening at once. Gold's at all-time highs. Silver is up 150% in 2025. Copper's having one of its strongest years since the financial crisis, so it's basically precious metals across the board. This usually happens when investors are scared. They see the purchasing power decreasing. They can't hold their money in cash, but they're worried with the stock market rallying to all-time highs that they need to be in something hard, a hard asset, because a hard asset will likely not be affected as much in a recession. Now, of course, what's going to end up happening is people sell everything in a recession, but people are fleeing to what they believe are safe stores of value. But let's zoom out and see how silver has performed over time. Over the past 15 years, it has doubled. However, most of that growth has come literally this year. Silver in 2010 was sitting at about $30.91. Fast forward to 2024, it was below that number, trading at under $29. So the crazy part is silver has only had a couple big runs, and typically they happen during times of financial uncertainty. Let's look at the chart. Look at these big runs. In 1980, silver had a crazy, ridiculous candle from basically nothing to over $47 a piece, and then it crashed down to nothing again. 2011, a similar gigantic spike upward just to crash back down literally 75% of the way. Now it ran back up. What's going to happen? Is it going to play out the exact same way? And when it does, where is that money going to flow to? I believe it's going to flow to the most logical place when people finally realize what Bitcoin is and how it is the gift of mathematical money that prevents this endless printing that destroys purchasing power and has destroyed every economy over the past 2,000 years. This happens time and time again, but we just keep doing the same thing, acting like something else is going to change. It blows my mind. And this chart, I think, is so interesting to show not the yearly highs, but the yearly lows. 10 years ago, Bitcoin was at 190 as the low. Fast forward 5 years, the low was $5,000. Fast forward to 2025, the low was $74,000. This trend is unreal. This trend is your friend. don't always look at the highs, look at the yearly lows. Now, we talked about in a previous video how Bitcoin's price was essentially trapped between $85,000 and $90,000 because of this massive options market. There was a ton of options expiring on December 26th, which basically kept the price constrained because there was parties that would benefit from the price staying in that range. This timing is all too coincidental, showing that the correction this cycle, low to local low, takes about 30 to 40 days. We're in day 35. Now, this was yesterday, so we're actually in day 36. Hopefully, we have a break to the upside, because if we break to the downside, I definitely see us bleeding further down. So 2025 was obviously not our year, but you know what? All we have to do is restart the game and keep going. Every single pundit, every single critic says Bitcoin is a Ponzi scheme going to zero, yet Bitcoin continues, even with this downtrend, to be the best performing asset of the past decade. It is the first asset with a mathematical cap on the inflation rate, because there is no inflation rate. There is actually a finite amount of Bitcoin, unlike every other asset. So with the new year upon us, I highly recommend you spend time researching Bitcoin. Don't take my advice. Yes, watch my videos to get yourself more educated, but do additional research and learn as much as you can to see if this is the solution to your challenge. I always tell people, don't listen to me, do your own research. And I believe if you do enough research, you will come to the same conclusion that I have, which is that Bitcoin could be the way to actually creating sound money and not having the same failed experiment we've had for thousands of years. So if you're enjoying this content, don't forget to like and subscribe for more tips. We're putting out episodes like this every single week. And if you want extra help to master this world of crypto, don't forget to scroll down below and schedule a call with me or my team to see if you're a good fit for our DeFi Accelerator program. Thanks for watching, and I hope to see you in the next episode.